worried about the direction of the market at all? We were just kind of citing some data from Goldman Sachs that pointed to some possible turbulence.
Short term, there's going to be a lot of volatility. There's significant uncertainty in terms of the debt ceiling, in terms of U.S.-China relations. We think, and in terms of the Fed, but we think the best thing for investors to do is to take a 6 to 12-month time frame. And on that basis, we are pretty upbeat about stocks. We think the market's going to be higher. And we do think the rally, which has been very narrow in the biggest tech companies, is going to broaden out to the rest of the market.
All right. So with that optimism, David Katz, what is your WEX word of the day?
Agitable. It really describes this market. Anything could set this market off. You've had the market sell off for the last few days based upon 1 or 2 data points. Anything in terms of the debt ceiling, again, makes the market pretty unhappy.
So you're saying it's an unhappy market. You're also talking about the breadth of the market. So give us a sense of portfolio protection. What steps are you looking to kind of navigate all this volatility and the potential for not only a debt limit default, but even possibly another rate hike by the Fed?
Well, we think the best thing to do is to take that longer time horizon, buy really good businesses at reasonable valuations. In light of the market activity over the last year and in terms of this earnings season, you have a lot of really great businesses that are at 10 to 12 times earnings. If you have a good balance sheet, a low valuation, and good business prospects, we think you're going to do very well. And we would focus on that rather than focus on the noise of the day. And the noise is pretty significant and scary. But if you look at fundamentals, that's going to be the best way to make money in this market.
All right, so very interesting. So I want to touch on some of your stock picks right now. One of them I found very interesting was General Dynamics. It's an industrial name. Why are you so bullish on that right now in this current environment?
So we'd say the theme of the day, and this is really interesting, is we're seeing the most insider buying that we've seen in the last decade. It's really spread out in a lot of companies that have done well after a good earnings season sold off, and insiders are stepping up in a meaningful way. We're seeing like $2.5 million of buying. General Dynamics is a good example. One of the directors just bought $1 million+. It's a good long-term prospects. We think it's down over some short-term concerns with the budget and the deficit and the debt ceiling. Also some problems in the consumer area. But we think it's a really good business. The world is not a safe place. It's getting more dangerous every day. And they're a great play on that. And you're getting them at a very attractive valuation.
All right, I want to turn our attention back to tech for just a moment. We had a great Worldwide Exchange exclusive just a moment. I want to bounce this off you. We spoke with Helen Dixon, the head regulator for data privacy in the EU. Here's her take on Meta platforms, the fine, and even more regulation that could be coming down the pike.
There's actually a whole suite of new regulation that's been implemented in the EU, in addition to a Digital Markets Act that will regulate gatekeepers like Google. So I think there's a lot of concern. I think there's recognition that the General Data Protection Regulation was never going to be the start and finish of regulating platforms. And now there are more specific laws looking to target more specific risks, like the risks that may arise in certain implementations of artificial intelligence.
All right, so that last part especially, David, artificial intelligence has really been one of the catalysts for this market. Going full circle, I should say. We talked about the breadth of the market. A lot of the stocks pushing this market higher are linked to AI. Is regulation, is that a headwind that you're very concerned about? Does that change your investment thesis at all?
Well, you have a very adversarial regulatory environment in both Europe and the United States. Companies have generally learned to live with that. In terms of the fine, this is a good reflection of that. In terms of artificial intelligence regulation, we think a lot of companies welcome that because it will give them some guidance and direction. So the AI regulation, we think, is a good thing. The other regulation is worrisome. The companies have learned to navigate through that. Our concern that the mega tech is going to slow down is not so much about this regulation. It's just that they've melted up and got to really significant excess valuations. And a lot of other areas in the market are attractive.